It is your May mortgage and housing update. So if you're new to the channel, I'm a mortgage lender. My team's in 50 states. We're one of the top purchase teams in America. If you're not new to the channel, you've heard me say that 1,000 times, and I look forward to speaking with you on the phone when you're buying a house so you can say, I know, Jen. So here we go. Oh gosh, guys, look, I'm gonna call it. I'm calling the year. That's it. It's May. I'm calling the year. This is the year of economic uncertainty. That's right. That's what this is. And it is what is affecting the housing market, the travel market. Every single market in the United States is affected by uncertainty right now. What's driving the uncertainty? There's a lot of change. We talked about this earlier in the year, that we have an administration that's aggressively doing things, and I'm gonna say they're tipping the apple cart, okay? It could be a good thing, it could be a bad thing. We right now don't know how many of those apples are rotten, but right now the whole cart is tipped. And you and I are in the street. We're dodging apples as they come left and right. Oh, they're going to cut federal jobs. Wait, they're not. Wait, they are. Wait, they're going to cut spending on this. Wait, they're not. Oh, dodge the apples, everybody. Inflation's down. Oh, God, tariffs could make it go up, right? We are in a video game where we are dodging apples, you know? And sometimes in dodging those apples, we step on one and we're like, ooh, that was a bad one. Glad that's out of the apple cart. And then we're like, wait, I think this was a good one. Put it back in, everybody. So what does that lead to in mortgages and housing? Rates. Let's start with rates, right? I'm a mortgage lender. That's what I live and breathe. It's interest rates. Same old, right? Volatility, you know, are we seeing those 5% rates that I have been fantasizing about? You too, you know, we have the same dreams at night. 5% interest rates or lower. Seriously, that's a hot dream these days. No, we're not seeing that. You know, the US just got downgraded by Moody's. We have the big, beautiful bill that's being voted on in the Senate. Probably there's going to be a lot of changes to it. There's concerns that that's going to lead to inflation. The Fed is keeping the Fed fund rate stable right now because they're looking at everything saying, there's apples all over the floor, everybody. What the hell are we supposed to do? We don't know what this apple cart, we don't know if we should be discounting it. We should know if we should be increasing the price. We don't know. There's apples everywhere, and we don't know what's gonna end up in the apple cart. Now, you may be wondering right now, Jen, did you play some weird video game with, no, I didn't, but I feel like this is actually a really good analogy because that is what is happening. We don't know what the state of the economy is going to be. We don't know. So look, could we end up with a Gilded Age? Absolutely. Could we end up with inflation? Sure. When will we know? Guys, we're not going to know until these tariff deals are hammered out. And we're not going to know until probably 90 days after the tariff deals are hammered out. Because the question's going to be, well, wait a second. If we have a deal that everybody agrees to, how long are these deals going to be for? Can they be reneged on? You know, for example, recently with the European Union, the EU, we saw that originally in April, Trump had put a 90-day pause on tariffs because they were negotiating, right? Last week he came out and he said, I don't like the way this is going. We're going to have a 50% tariff on the EU effective June 1st. Whoa, wait, what about this 90 days? Then there was a conversation and suddenly that's on hold again, okay? We are in the midst of a negotiation as a nation. It is that simple. And until those negotiations are done, rates are going to stay in the same realm they are. You're going to see them bob up. You're going to see them bob down based on whatever the sentiment is of the day. There's a lot of people that are saying that Jerome Powell should have already cut rates. But then there's the other people saying, how the hell can he? He doesn't know what's in the apple cart yet, people. So look, that's what's going to be happening with rates. Now, if you're like, oh, Jen, should I wait to buy a house? Guys, it depends, right? Like, here's the thing. I am firmly, and I have been, you can watch my videos for the last 7 years. If you want a house, if you're currently renting, if you know where you want to live, if you can comfortably afford the payment, buy the house. Do it, right? if all of those things are true. Now, if you can barely afford the payment, if you are going to end up house poor, if you're not sure that you like the house, if you're not sure you want to live in that area, do not buy the house. Don't. Yes, I am a mortgage lender and I make money when you close loans. I don't want you to buy a house if any of that's true. It's not worth it. It's not worth it to you and it's not worth it to me. Okay, so on the mortgage front, in terms of, I've seen some stuff in the news where they're like, oh, banks are getting really restrictive. What? I don't know. I'm not seeing that. Like, that's the thing, is that we do have more loan products than ever. You know, can you go higher with debt to income in certain loans than you should? Absolutely, which is why you want to make sure you're working with a lender and you're asking about, like, hey, what's my payment going to be? Really making sure what they're quoting you on taxes and insurance is accurate, because so many lenders are lowballing those numbers so you don't get scared. So really having those conversations, making sure you're comfortable, making sure you're not maxing out is critical. Okay. Housing market. Like, seriously, I feel like there's no new news here and there hasn't been for 2 years. And I'm not saying that to be flippant. I'm saying that more as I feel like, you know, at some point you guys are going to be like, you say the same thing every month on housing. And I am going to continue saying the same thing because we have it's like a tale of two cities, right? Did you guys read that book? No one did. Okay. Tale of two cities. Let's look at a market like, let's use Dallas. Okay. Dallas had 20 builders that went in and built hundreds and hundreds and hundreds and thousands of houses within the last few years. There's inventory in Dallas. So if you're shopping in Dallas, Houston, anywhere there's a lot of builders, you're going to get a great deal. And I love that for you. I'm happy for you on that. And you're like, but Jen, you know, how do I get the great deal? They're offering $5,000 off if I do it this weekend. Guys, if they're offering something, you can always negotiate more, okay? That's new construction, that's everything. A lot of times people believe the list price, okay, right? And look, with most things in life, the price you see is what you pay. But I'm starting to think of the housing market in certain markets more like a friends and family sale. You know what I mean? Where there's the full price, but if you negotiate or you know about the special code, you're going to get it at a discount. And I do think in markets where we see a lot of building and a lot of inventory, I think it's a great time to buy that house and get them to pay all your closing. If you're a veteran, get them to pay off your credit card debt, guys. Remember, guys and gals, you can do that, okay? So check out my VA videos to learn about that. But even for non-veteran buyers, guys, get them to buy down your rate. Permanent, not temporary, okay? Permanent. There's a lot you can do in a market like that. Now, New Jersey. No, I'm still, New Jersey, parts of California, Virginia. Virginia, man, it's competitive. Virginia has not gotten a break. Look, there's parts of the country where we're going to see this for the next 10 plus years. There's not enough inventory. There's been zero building, or maybe there's been a builder that put in 50 houses, but there's 4,000 people that want houses, right? You are still seeing markets. I was talking to my sister about this the other day. She's in Seattle, multiple offers, overappraised value again. It depends on the market. So really keep that in mind when you're looking. And that's what drives me so crazy about the housing crash headlines. And I've really been looking more and more into that recently. I'm on X, I'm on Reddit. And what you have is you have people that are taking one market, right? They're like, there's this girl on X, she drives me crazy. Like, she's so uninformed, it makes me want to cry. But she's like, Dallas has all these listings, housing crash coming. To the nation? What? And look, do I think Dallas has a housing crash coming? I don't, and I'm going to tell you why. Dallas has a ton of people still moving there every single day. Dallas is getting their own stock market exchange. Dallas has so many jobs coming in there. Same thing with Houston. And that's what I look at when I see big clips of inventory, is I go, okay, is there the population to eat this up over 5-10 years? Is there the population? And the answer in both of those areas is yes. That's the thing. People don't think about this. Builders do not build in areas that don't have jobs coming. Builders are generally building in anticipation of jobs in the states where they can. Okay, and I say that because there's states where there's so much regulation, or at the local level, best of luck ever building anything, that even though there's jobs there, even though there's the demand there, you're not going to have new building there. Okay, so look, let's talk about the economy as a whole. I think that, as I called it earlier in this video, this is the year of economic uncertainty. I think there is a good chance we could come out of this stronger than ever. I think it could be rocky on the way, okay? And I don't think it's super helpful that we have every single billionaire. Have you guys noticed this recently? Like, every single billionaire has a PR agency where they're just saying scary shit. Yeah, I cursed, but that's what it is. You know, you've got Jamie Dimon, who's half the time going, well, if it's not a recession, it could be stagflation. Whoa, stagflation's terrifying. Stagflation's worse than a recession. We don't want that, right? You've got Bill Gates out there who's like, I know, I feel like there's a lot of you that want to drop some comments, have some fun. Anyways, but he's like, by 2034, we're not going to need doctors or nurses or white collar jobs because they'll be replaced by AI. What? So, you know, and then you've got tariffs. Are tariffs going to lead to inflation? Like, there's so much scary news out there. And then with the algorithms, what happens, you guys will enjoy this. I don't know if this has happened to you. I'm an Instagram gal, love it. And I was reading a couple stories on the economy. You know, I do read the stuff when the billionaires are saying this nonsense. Nonsense or fact, we'll see. I do have to say, though, a lot of the stuff that they say does financially benefit them, right? Like, what they say does affect the market, and they have the money in order to capitalize on that. Someone has to say it. It's true. Anyways, so I was reading some of these stories, and within about half an hour, my Instagram feed was filled with Depression-era cooking. I'm not kidding. First of all, I don't cook. But secondly, that's the rabbit hole it takes you down. So a lot of people are very uncertain about their finances right now. So here's what I'd recommend, guys. Look, I don't think belt tightening is bad. I think that if you're planning to put a vacation on a credit card, or you're thinking about doing some big purchase on a credit card, just don't. Like, look, consumer debt's out of control. Like, do not put stuff on a credit card. Do I think right now is a good time to really evaluate your finances, trim the fat, get back to the basics, start stacking cash? You know, if you're looking for a house, be as conservative as possible, start building up those reserves. Yes. Now, do I believe that you need 2 years or 3 years of reserves to buy a house? Absolutely not. But I don't think that in times of economic uncertainty, it's a bad idea to stack cash. I don't think stacking cash can ever hurt you, especially if you're stacking cash instead of buying stuff that maybe you don't really need, or subscribing to stuff where maybe you look at it once a month. I think it's a good time to evaluate. So I will be doing a video about how to prepare for a recession. I am not saying that we're going into a recession, but I do think it's a great way to trick you guys into spending. So I will be doing that. Anyways, so overview, economic uncertainty, theme of 2025. Do I think the Fed's going to lower rates anytime soon? How can they? Until they know what's going on with tariffs and inflation, they're going to watch, right? This is a watch and wait Fed. Housing market, you've got a ton of supply here, not much here, nothing new there. Loan programs, we're still lending, guys. Don't even worry about that. That's easy peasy. And overall, is now a good time to save? Yes, yes. But guys, it's always a good time to save. So trim the fat, cut the crap, get your finances in shape, and let's make sure that when the economic uncertainty of 2025 is over, you guys all come out stronger. Thanks for watching.